Welcome, and thank you for joining us. I'm Vivian, the brand lead at OSL. Today, we're excited to speak with Henri Arslanian, co-founder of the Nine Blocks Capital Management, which is one of the world's first crypto hedge fund licensed by Dubai's regulatory authorities, also known as FARA. Since launching in 2021, Nine Blocks has built a reputation for disciplined, market-neutral crypto fund designed specifically for institutional investors. And today, Henri, would you please introduce yourself a little bit and also tell us about Nine Blocks?
Of course, and thanks for having me. Very excited to be here with you all today. Yes, my name is Henri Arslanian, and my passion in life is the future of money. And I do this by basically being the co-founder of Nine Blocks Capital. Nine Blocks, we're very simple. Our goal is that we want to deliver consistent risk-adjusted returns to investors. And we do this basically by market-neutral funds that we have both a dollar fund and a Bitcoin fund. And we believe that institutional investors, family offices, allocators want the exposure to crypto, but at the same time by an entity that is regulated, that is best in class, and operates at the international levels of actually the standards of an asset management firm. And this is why, as you mentioned, we are the first and only crypto hedge fund that has a license by Dubai's first crypto specialized regulator, which is quite difficult to get, but also we really operate at the institutional standards. That goes from everywhere, from security and governance to basically how we're doing our risk management and the team that we have in place. So this is our fourth year operations. We're very excited and really continuing to drive forward institutional asset management in this space.
As part of the partnership at OSL Wealth, we are proud to be distributing two of your flagship strategies, the Bitcoin Market Neutral Fund and the USD Market Neutral Fund. So, Henri, you have had a very distinguished career in your traditional finance space and also digital asset. What motivated you to launch Nine Blocks Capital?
Yeah, so Nine Blocks Capital, when we launched the business in 2021, I've been in crypto since 2013, organized my first event in Hong Kong in 2014. And really a lot of conversations I was having over the years with a lot of family offices, allocators that want the exposure of crypto. But for them, they wanted also to do so via fund managers who are regulated, who are best in class, who are institutional. And this is how Nine Blocks came to be. And our idea, okay, let's build a business where we are crypto native, but at the same time we have institutional experience and expertise, and we can ensure that the clients can have that exposure they want via market neutral way. And it was never easy. I mean, launching an institutional grade crypto hedge fund is very difficult, and it took us obviously many years. But now we're proud to say that obviously we're one of the leaders, not only in crypto in Dubai where our license is, but globally as well. And I really believe that more and more a lot of the allocators, whether it's family offices or crypto firms, out of their treasury, they have digital assets, but they want to generate yield out of it as well. And this is why strategies like cost market neutral strategies come in handy to give this risk-adjusted returns to investors with a high Sharpe ratio, and actually something that they'd be happy to have exposure to.
Definitely. For those who are new to digital assets, can you explain at a high level what is a market-neutral crypto fund is? How is it going to be different from the traditional hedge fund strategies, and how does it benefit investors?
A very good question. So there's many strategies in crypto. For example, one that a lot of people know is being long only. You buy your Bitcoin, you hold your Bitcoin, and you ride that Bitcoin up or down, and with the volatility that it comes with. Our strategies are market neutral. What does market neutral mean? Is that we're basically doing arbitrage between different instruments. For example, one of our big strategies is what we call funding arbitrage. In crypto markets, the biggest derivative instrument is called a perpetual swap. It's basically a derivative that never settles. Unlike in traditional finance, where there's a calendar future that settles every quarter. But in order for that perpetual swap to continue, basically to the price to adjust to the spot price, every 8 hours, there's a payment that is made by those who are long and those who are short. What we do at a very basic level, we basically short the perp, we capture that payment every 8 hours, and we hedge that with spot Bitcoin. And that's what we call, let's say, funding arbitrage. And so in that, whether the price of Bitcoin goes up and down, doesn't matter for us, as long as people are trading, as long as volatility, as long as activity, we basically generate pure alpha for investors. So our strategies really are what we call funding arbitrage, basis arbitrage. We do a bit of market making, we do some statistical arbitrage, some quantitative strategies that we have in place as well. But at the core, somebody that looks at our products, there's very limited downside. It means even if the market falls, our fund does not really go down. But when there's upside, we're able to get the pure alpha of the fund. So this is why we delivered over 20% of annualized return since inception. And we're going on our 4th year right now. So with a very high Sharpe ratio. And this is what I believe for a lot of allocators. A lot of investors should have their directional exposure. They should have Bitcoin. They should have other digital assets that they can come and buy on the OSL platform. But at the same time, having exposure to a market neutral fund is, in my opinion, and I know I'm very biased, a bit of a no-brainer strategy, because you're able to get that pure alpha that comes in digital markets. And this is because there's inefficiencies in digital markets, and this inefficiencies will just continue for a long time in the digital asset space, especially as the industry continues to grow.
That's interesting that you picked USD and Bitcoin as a strategy core element.
Yep.
So what's the key difference between the two, and how does each one can fit into the portfolio?
So a very good, interesting question. So we have two funds. One is our dollar fund. So it's basically where investors can subscribe in dollars and stable coins or other similar instruments. And that product we generate about, our goal is to generate 20 to 30% annualized net a year. In that strategy, we do a lot of the same strategies that we just discussed on the funding arbitrage, basis arbitrage, and others. But that is really for investors that are looking at their portfolio and they want to have some digital assets exposure. I always recommend them to get them directional exposure, to come on the OSL platform and buy their Bitcoin. But if they're looking for pure alpha from digital assets, this strategy is very interesting. The Bitcoin fund is actually a bit interesting. What we realized once we launched our business, we had a lot of investors in the market that hold Bitcoin. They're holding Bitcoin, but they're not doing much with it. And for a lot of them, they're like, well, I'm not gonna sell my Bitcoin. I'm gonna keep it. I'm very long-term bullish on Bitcoin. But in the interim, if there's a way I can generate some yield on it, and that's where our fund comes in. In our Bitcoin fund, we basically subscriptions are in Bitcoin. We use that basically as collateral on the various exchanges that we trade, and basically generate returns. Everything in Bitcoin. So it's Bitcoin in, Bitcoin out, and you're able to get a yield on that Bitcoin. The yield on that product is obviously way lower, but at least allows investors that will remain long Bitcoin to actually generate some yield on their Bitcoin in ways that they wouldn't otherwise have.
So risk management is definitely a top priority for institutional investors. How does your team manage risk in an asset class where we see it's so volatile, so fast moving?
Absolutely. Risk management is, we wake up in the morning, the first thing we think about is risk management. And there's a couple of reasons for it. The biggest risk in any market neutral strategy is counterparty risk. Yes, there's always market risk, there's other regulatory risk and other risks that we're all familiar with, but the biggest risk is always counterparty risk. So now, how do we mitigate counterparty risk in a market neutral fund? There's a couple of things that we do. First of all, we obviously do due diligence on the various counterparties that we trade with. We've been in crypto for a decade. We have the fund for a couple of years, and as you know, in the industry, there's a lot of knowledge that comes in with experience and contacts that we have. Second, we have exchange limits on the various exchange that we trade on. For example, at 9 Blocks, we have tier 1 counterparties that could be up to 50% of our portfolio. There's the tier 2 counterparties that could be 25% of our portfolio. So there's obviously old school risk management diversification of counterparties. On top of that, we basically use it whenever we can, third-party off-exchange custody solutions. So solutions where we can leave some of our assets at a certain custodian and be able to then trade on the particular exchange, reducing the exposure that we have on that particular exchange and the exposure we have there. So these are various approaches that we take while we're mitigating the counterparty risk to these various exchanges. And on top of it, of course, we monitor these exchanges on an ongoing basis. We monitor balances that we have at these different exchanges. There's a lot of ongoing risk management that takes place. But the biggest risk for any market neutral strategy is counterparty risk. But I would argue that currently, right now, the counterparty risk is significantly lower than what we had a couple of years ago, especially pre-FTX years. The counterparties are more solid, they're more transparent, there's more regulatory frameworks around those, and that's a big plus. And that's probably another big advantage that we have being licensed by VARA, is we're hoping in the next couple of months to transition with all our counterparties to their Dubai entity. A lot of our counterparties that we have also have a VARA license in Dubai. And this enables us that by regulations, they have to segregate our assets in the UAE. And so over the next couple of years, we hope that actually not only we'll have all the protections that I mentioned, but also we'll be able to have a lot of assets that we have segregated in the UAE. And that I believe is very beneficial for clients from a counterparty risk perspective.
Thank Thank you. When we talk about partners, counterparties, or the exchanges that you worked with, you have chosen OSL to be your distribution partner for the two strategies. What thing that you will look into as choosing a distribution partner, and why Asian market right now?
Yeah, so we've been big fans of OSL for many years since the company was actually started in Hong Kong back in the day. And I believe that as a company, as a fund, Nine Blocks, we're very focused on being institutional grade, having integrity, and being regulated. And I think OSL is a firm that matches our values as well. From day one, OSL has taken the route of being regulated, has always taken the right path when it comes to operating at the international and institutional standards. And this is why we're very happy to partner with OSL to distribute both our US dollar and our Bitcoin fund to your clients. And we believe that as the crypto industry continues to grow, as the institutional industry continues to grow, and as the allocation to this industry continues to grow, we believe that players that have, since day one, focused on being transparent, regulated, and operate at these institutional standards will benefit. And this is why we see the relationship with OSL as a 1 + 1 = 3 relationship, where we believe that not only both Nine Blocks and OSL can benefit, but most importantly, the clients of OSL.
Thank you. So, for institutional investors who already have exposure to equities, to bonds, or alternative, where do you see a market-neutral crypto fund be in their portfolio?
Over the years, many of us who have been in the space for a long time, we used to get laughed at in the early days when we used to even bring up the idea of having some Bitcoin or digital assets exposure as part of a diversified portfolio. I think for right now that ship has sailed, and I think many institutional allocators realize that Bitcoin and digital assets have a role to play in the diversified portfolio. What I tell everybody is your investors should have their directional exposure. I personally believe that Bitcoin has a role in every portfolio in a way that you have exposure to gold, and digital gold, aka Bitcoin, definitely has a role to play in it. But at the same time, you technically don't need to even believe in digital assets when you talk about a market neutral fund, because what we benefit from, where we generate alpha from, are the inefficiencies of digital markets. For us, whether the market goes up or down, we don't really care. Of course, when the market goes up, it's better because there's more retail, there's more activity. But for us, all we care about is there's activity, there's liquidity, there's volatility, and that's how we generate pure alpha for our investors. So the way to look at a market neutral fund as part of a portfolio is actually, whether it's crypto or not does not matter. As long as you believe in inefficient markets, and God knows there's a lot of that in crypto, a market neutral has a role to play. And that's, by the way, one of the reasons we launched our fund initially as part of a market neutral strategy, because I genuinely believe that investors will want to have their Bitcoin exposure, whether they'll go with long bias managers or try to find the alpha or the right coins. There's a bit of art there as much as there is science. But I think in a market neutral strategy, everybody gets it, everybody understands that there's inefficiencies in crypto markets, and because of that, thanks to that, there's alpha to be generated for investors, and that has a role to play as part of the diversified exposure.
Interesting that you mentioned. So from your perspective, how has the institutional adoption to crypto evolved over the past few years? And what do you think are the most important factors that they look into?
I'm a firm believer that we are still at the very early days of institutional adoption of crypto. Again, if I look at my last decade in the space, in the early days, we used to get excited when a company would even use Bitcoin or accept Bitcoin as payments. And over the last couple of years, obviously, things have changed quite radically. I would say there's a couple of things that I'm watching right now. One of them is, of course, companies are putting Bitcoin as part of their treasury. There's a number of them in Asia, there's a number of them in the US, and I think that's going to continue to grow over the next couple of years. Second, which I think is very important, is a lot of the institutional investors, whether they're family offices, they treasure large companies, and eventually we'll get to foundations, pension funds, and the likes, where they look at their overall exposure and overall investments, and they realize that digital assets, Bitcoin, and other crypto funds have a role to play as part of a diversified portfolio that they have. And that, I think, we're really at the early stages. I mean, to put things in perspective, today the total AUM in crypto hedge funds, total AUM is only $5 billion. By way of comparison, the total AUM of traditional hedge funds is $5 trillion. So even if the crypto hedge fund industry grows 10x, it's still only 1/100 of the size of the total hedge fund industry. And I'm not even talking here about the global asset management industry, which is significantly larger. So we're really at the early innings, and I think firms, including OSL, that are able to position products in this regard will benefit. And then there's other things that I'm watching as well when it comes to adoption. One of them is what's happening with state nations, countries that are adding, making strategic reserves of Bitcoin, which is a term that I don't think is the right term, but at least, putting capital in Bitcoin. We had small countries from Bhutan to El Salvador, and now with the US coming in, I think that's going to be another big driver in the space. So I really believe we're at the very early days of institutional adoption. And we believe this was going to happen multiple years earlier, but I'm extremely bullish with everything happening. It's in particular with the interest that we've seen with the ETFs happening, not only in the US, but in Asia as well. And I think these are all factors that really show us the potential that we have in this asset class.
So in your experience, what are the biggest misconceptions that an institutional investor has, and how would you address them?
There's a lot of misconceptions, and those misconceptions have changed a lot over the years in the digital asset space. For example, in the early days, people would think Bitcoin, they'll say, Bitcoin is for money laundering, Bitcoin is for criminals, and so on and so forth. I think those myths have now been demystified, where basically anybody who spends a bit of time in the space will realize we're really talking a very, very small amount of money that is being used for, is linked to illicit activities. And I think a lot of the institutional investors have gone over that bump. Another big misconception there was that there's no interest from retail investors. Nobody's interested in this space. And now what especially the launch of the ETF has shown in the US, was that there is tremendous demand. I mean, the fact that I find the most astonishing was that the Bitcoin ETF launch in the US was the most successful launch in ETF history. Think about it, 30 years of data, 5,000 ETFs launched, and the Bitcoin ETF is the most successful. Just at the end of the year, in the end of 2024, there were more AUM in Bitcoin ETFs than in gold ETFs in the US. So this really shows you how much demand there was. And for many years, the misconception was, nobody's interested in this. And I think the success the ETFs had really proved a lot of that point there. And I would say the last misconception we see, I would say right now, towards the crypto industry is a lot of allocators think Bitcoin or they think crypto. They think two guys in a t-shirt just punting crypto with no risk management and just going to the moon, as the expression goes. The reality is there's a number of actually right now in the space, fund managers, there's a lot of institutional players, firms like OSL, for example, that are there, have a regulated business, a regulated offering, firms like us that now for many years have been do proper institutional grade asset management. And I think for many of even investors that we talk to, when they see us, they talk to us, they do due diligence on us, they look at our DDQs, they look at our data rooms, and they realize, wow, these guys are actually as institutional, if not more, than many of the traditional hedge funds that we invest in. And I believe, unfortunately, as a crypto industry, we need to compensate for this. We have to show that we are regulated, that we're best in class. And I'm convinced in 10, 15, 20 years, we're going to look back at this era, interviews like these, and say, wow, it's crazy how early we were and how questions investors would ask us at the time. And in 10, 15 years, everyone will have digital assets exposure as part of their normal portfolio. In the same way that 30 years ago, nobody had hedge fund exposure. 20 years ago, everybody was afraid of emerging markets exposure and even or derivatives exposure. Now these instruments are all normal as part of any portfolio. Same thing will happen with digital assets.
Perfect. So finally, as someone who sits in the intersection between finance, regulation, and crypto, how would you address crypto asset management in the next 5 years?
I'm extremely bullish on the future of crypto asset management, and I really believe we're at the very, very early stage of that growth. Like, as I just mentioned, the total AUM of crypto hedge funds is only $5 billion compared to the traditional hedge fund space that is $5 trillion. So there's this tremendous growth that will take place over the next couple of years. I think every institutional allocator will look at this asset class and say, okay, I need to have a bit of exposure there. You may believe in Bitcoin, you may not believe in Bitcoin, you may believe in crypto, you may not believe in crypto, but there's opportunities there, and as part of a diversified portfolio, I think allocators will need to have exposure to. I think over the last decade, the big question was from allocators, why Bitcoin? Why should I have Bitcoin in my portfolio? And I think we're going to see the tide change, and the question be, why don't you have Bitcoin in my portfolio? And I think that's a pretty important shift that is happening as we speak.
Or how much Bitcoin do you have?
Oh, absolutely. How much as well? And also, there's always, allocators will start with Bitcoin, for example. We'll start with market neutral strategies, and then the list will go on and on. It'll be, I'm convinced in the next couple of years we'll have a lot of funds that are involved in picking tokens, and they believe they can generate alpha on that side. So there's a lot of the industry will continue to grow over the next couple of years, and I find it's a privilege. All of us involved in OSL and 9 Blocks, our listeners watching this, that we have the chance to not only witness the growth of an industry, but actually have the chance to play a role in shaping it. And I believe it's a privilege, and I'm grateful every day that we have a chance to be in this industry. Our children and our grandchildren will ask us about this period of the history of money and saying, wow, Dad, how was it when Bitcoin was only $100,000? How was it when the industry was just starting, the first ETFs came about, when the US just started getting into Bitcoin? And we're going to look back and think about it a bit with nostalgia in 10, 15 years. So I think it's a privilege that we have to be in this industry right now.
Thank you, Henri, and thanks for everyone.